The topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Good morning, USA. I've always wanted to do that, kind of like Robin Williams, Good Morning Vietnam. Have a little fun. And we're talking about taxes and tax prep. What could be more fun than that? Well, I can think of a lot of things. We get into doing taxes and bookkeeping and stuff for clients, but, weekends and evenings, I also get out and do a little bit of ranching and dealing with cattle. So, when you're dealing with cattle and you're checking for pregnancy, you've got to make sure that these cows are open before you take them for artificial insemination and stuff, AI, and you put a nice big plastic bag up your arm and you stick your arm up their rear end and you check to see if they're pregnant. That's the way we feel about taxes sometimes. Do we really want to get into this stuff? Do we really want to do taxes? Man, everybody hates doing taxes. Everybody hates paying taxes. So you got to find ways to pay less, to, lower what your burden is for your taxes. And when you're in business, it becomes even more crucial to decrease the burden of taxes and pay less in taxes so that, you're putting more money in your pocket, you're saving more money. But today, what do we need to provide our tax preparer information to prepare our taxes? It starts really, really simple. When you're out there dealing with preparing, you're a new client, you're going to have to, provide them your tax identification number, your social security numbers. You're going to have to provide your full name, your date of birth. Most of us are going to require a copy of your driver's license. And then if you're married, we're going to need your spouse's full name, their social security number, and their date of birth, and their driver's license as well. Now remember, hey, nobody can file taxes for you, or they shouldn't be filing taxes for you without your signature. And when you are going to sign your tax return, read it, look through it. Don't just go to the signature page where they tell you to sign. People do this every day. I see this in contracts. I see this with people in business, not paying attention to what they're doing, and they just sign. Read what you're signing. Again, read what you're signing. Go through, make sure the numbers make sense, because you're taking full responsibility for your tax return. Now, if you're a client of ours, every year we provide you with a tax organizer. Go through this tax organizer, answer every question that this is in the organizer, and then make changes to anything that you see that is incorrect or may have changed, or anything that you need to disclose to us or have questions about. Write it down. We're going to ask you those questions. We're going to find out what you have going on. So if you're looking for ways to save money, or maybe you've heard from some other podcast, or you've heard from somebody else, this or that, or you were at a fuel pump, putting gas in your truck, and your neighbor starts talking to you about taxes and there's a tax deduction. Talk to us. Hey, we'll answer the questions for you. That's what we're here to do. What else do you need? Well, you as an individual, you may have identity protection PIN. So if you've actually filed and requested an identity protection PIN from the IRS, you will get that letter every year. So whether it's you or your spouse, you need to provide a copy of that letter to your tax preparer. That PIN is very important. The IRS will not let us file your tax return without that PIN number. It'll come back and say you have an identity protection PIN. So you're going to make sure that you provide that PIN to us for both you and your spouse, or if it's just your spouse, just your spouse. If you're looking for your refund or payment to be automatically either debited to your account or credited from your account, you're going to have to provide your bank's routing number and account number so that we make sure that we have everything right. We will ask for a voided check just to make sure that you've got the right numbers on there. Now, I know many people don't have checks these days, or you have very few checks. Sometimes it's just making a copy of it, writing void on it, and you'll put that into a secure portal for us. Or if you're showing up to somebody's place of business to do it, or you're coming here to do your taxes, you can just bring your checkbook with you, and we can, take the information off of that as well. If you don't have that, you can go to your bank or call your bank and ask for those routing numbers and account numbers to make sure you've got the right one. Some credit unions have a specific routing number for withdrawing money from your account or depositing money into your account. So you need to make sure you've got the right routing number. And some credit unions require the full account number. So if you got maybe 4 zeros in front of your account number, we need to know that we've got to have every one of those zeros on there so that the money can get to your account properly. And then, if you're doing taxes with us, we have you verify that information before we're ever going to file your return. So when you're signing your tax return, they're going to have a transmission page that has your account and routing numbers on it. And we're going to make you sign that to verify that information is correct, because we're not going to take responsibility if you provided us incorrect routing numbers or account numbers, because the IRS is trying to put money in your account. And if those are wrong, it's going to take you much longer to get your refund when the IRS sends it back, or maybe you deposited it into the wrong person's account. Not supposed to happen, but it does. So what else is needed? Dependent information. Who are your dependents? Now, if you've been doing taxes with somebody for a long time and you think, oh, they have it, verify. Are you still able to claim the people you claimed in the past? Or maybe you had a new child. And you need to provide their name, social security number, and date of birth to your tax preparer. So make sure that you have all the dates of birth correct, the social security number is correct. Make sure the child's name is correct. You may call somebody Johnny and his name is John. We'll need to make sure we've got the precise name, or maybe there's a different last name from yours. You got married and you have your wife had kids and they have a different last name. And you're claiming those kids. Well, if you're claiming those kids, then, we need to make sure we got the right last names on there. If they've been in childcare, you're going to want the childcare records. How much did you pay for childcare? And that's got to include name, address, and tax ID number of the child care provider. Now, if it's an individual, that's their social security number. Those people, should be reporting that information to the IRS that they've earned this money as an individual. If it's a business, it's their employer identification number. But we're going to need those records to be able to fill out the 2441 for getting the credit for child care out there. Income of dependents. So if your dependents are earning income, we're going to need to know what they've earned so we can decide, are they truly a dependent? Are you providing more than 50% of their support in the household, uh, even if they are 17 or 18? Or maybe you're trying to claim a parent or other sibling as a dependent and you are providing more than 50% of their support, then we're going to need to know what income those adults had so that we can make sure that uh, we can verify that you are 50%, providing 50% or more of their support. You got to remember, tax preparers, we hate this role of doing due diligence, but the IRS does require us to do due diligence for preparing a tax return. And we've got to file Form 8332 as well, showing that the child's custodial parents are releasing the right for you to claim this child. So if you have a child that could be claimed somewhere else, you would have to file this form for the non-custodial parent. So not only are we doing due diligence of the children or maybe adults that you are trying to claim on your tax return, we're having to do a little bit of due diligence for those children that you've been released to be able to claim on your tax return as well. You think tax preparers and have it easy and this is all easy? No. The IRS puts stringent requirements on tax preparers doing due diligence on returns that we're preparing and hold us to that level of due diligence. Hey, when we come back after this break, we're going to start talking about sources of income and what information you've got to provide for your income. And we'll be back right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Speaking of taxation solutions and IRS audits, the IRS does still do audits. And the IRS looks at these tax returns and they have computer generated logarithms that will go through and decide whose tax return to pull. And a lot of these are random, but a lot of times it's due to red flags. And those red flags can be, many different things. A lot of times, we'll talk about it later, is using round numbers for your expenses and stuff. But also, sources of income can become a very big red flag for you. And what do we mean by sources of income? Like your W-2 forms or your 1099s. So what does this create a red flag? Well, not reporting all your income. So, maybe it got lost in the mail and you didn't report a 1099 and you were only reporting off of the 1099s and you shorted your income or you forgot to put a W-2 on there. You forgot about a small job you had. These can cause audits. A lot of times it's just correspondence audits saying, hey, you missed something. But other times it can create, big audits where you're having to support all of your tax return, especially like if you're in business. So what other sources of income are we looking for? We're looking, of course, those W-2s, but then you're looking at a 1099-G, which is your unemployment. So if you were unemployed, your state is going to send you a 1099-G, and that is taxable income to you. Of course, your 1099s, and those could be your NECs, non-employment compensation. It can be your 1099 miscellaneous for other incomes, rents, royalties, etc. Schedules K1. K1s come from ownership in a S corporation or partnership or limited partnership. Maybe you've done investments and you invested in one of these oil and gas partnerships. They're going to send you a K1. So you got to look at your investments and what you've invested in, and you may be getting a K1 from them. 1099 miscellaneous, always be looking at that. 1099 DIV, dividends, you're going to be looking for those as well. If you have accounts with maybe Schwab or Fidelity and dividends have been going through there, you're going to want to provide the 1099-B from your brokerage account. And that's going to list out dividends, interest received, and stock trades, gains or losses on the sale of stocks. So all those are going to be reported as well. Now, if you're self-employed, you get the 1099 NEC. You're also going to need to provide records of all your expenses. In most cases, your preparer is probably going to ask you for a profit and loss, and also possibly a balance sheet, depending on how big you are and how much business you're doing. They're going to be looking for records of all your expenses. Now, hey, don't take it bad if somebody comes to you and asks you for proof behind some of the expenses. Maybe you provided round numbers. They should be asking you, is this correct? Maybe you provided expenses for maintenance and repairs. If you've got a truck or you've got other assets that you spend money on repairing, they're going to be looking for what kind of repairs you did in this business. And realistically, it's repairs that extended the useful life of the equipment, not just general repairs like changing oil on your car or truck or changing the fluids in a piece of equipment. It's going to be, hey, I just replaced my engine, something that extended the useful life. Those kind of repairs are going to be capitalized and depreciated. Make sure that if you bought any other fixed assets in the business, that you've disclosed these to your tax preparer so that they can be recorded correctly and depreciated. Now, most of us are going to ask for that receipt, buyer's order, what gives us the information of what you actually paid for the asset. We have a lot of people that will come to us and say, hey, I paid $75,000 for this tractor. When in reality, they paid $77,392 for that piece of equipment. So you're losing part of a write-off because you're only remembering what you thought you paid, or maybe what you financed portion of it and not the whole thing. Or maybe you're thinking it's $85,000 because you looked at your financing agreement and that's how much you're going to pay over the life of the loan. Well, we've got to get the actual number from the buyer's order to make sure that we're recording this correctly for you, so you get the right write-off of your equipment. We want to make sure that we're dotting the I's and crossing the T's with you to make sure that you're not going to have any hiccups in your taxes. And then you don't come back to us a year or two later and went, well, no, actually, I think we've got the support to show you where these numbers come from. And you can actually see that, hey, these are correct as you're going. Now, if you're doing bookkeeping with us, with truckertaxtools.com, we're already gathering all this information from you as we go. We get in trouble with people because we ask for too much information, but it's to dot our I's and cross the T's for you, in the purpose of keeping you protected if you were ever to go through an audit, and knowing that your tax return is going to be done correctly with all the information that is required by the IRS to get the tax deduction, depreciation, or even amortization that's out there on your taxes. Now, being in business, a lot of times you may not be renting a place, you may be using a home office. Well, it's a nice little deduction that you can have. A lot of times we use Safe Harbor, where they're just giving you a base amount based on the square footage of the office you use in your house. Now, the IRS has some requirements out there, and those requirements are going to be such that it is used exclusively for business. Nothing else should be going on there. That means, it's not your family room, living room. It's not the children's playroom. It's an office you're using for general and administrative expenses that is used exclusively for office, or an area that's used exclusively for office. That can go, we have people that use a barn out there to store their trucks or their tractors, and they're able to write off the usage of the barn for storage, or maybe they're using it for repairs for their truck or tractor. We're going to be able to show you how you can do that, or even possibly lease it to your business and change the way the income is recorded out there, so that you get a better write-off and help maybe avoid some self-employment taxes out there as well. Now, if you're in business, hopefully you've been making estimated tax payments. See, because you being in business, you're not getting a paycheck. So if you're self-employed and you're doing Schedule C, whatever the bottom line net income on Schedule C is taxed for Social Security, Medicare, and federal income taxes. Social Security and Medicare is going to make up that 15.3% roughly. And then your federal income tax based on, what your taxable income is. And you should have been making estimated tax payments throughout the year, every quarter. The IRS doesn't run regular quarters. It's at April 15th, June 15th, September 15th, and January 15th is when the estimated taxes are due. So make sure you made your estimated tax payments. And a lot of times we tell people, hey, make estimated tax payments easy, make them monthly. If your income's too high, we're going to start talking about tax planning and doing S corps or LLCs as a partnership. Many different options to save you money on your taxes. But it's something that a good tax preparer is going to help guide you down the road to saving money. Hey, when we come back after this break, we're going to start talking about rental properties and rental income. And we'll talk about that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes, no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for you with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're trying to keep people trucking and keep people on the road and, keep people moving in business. Speaking of business and stuff, our president has had a busy first 7 days in office and feel like he's been moving everything, right down the road from helping people in North Carolina to getting out to California and finding ways to help people in California with all these natural disasters. And, it's kind of been an amazing week to actually watch this president work and what he's trying to do and staying true to, what he committed to, in his pre-election speeches and campaign speeches and everything out there. His next things on his agenda is trying to get tips non-taxable, getting Social Security non-taxable. Let's see if he can accomplish this in the first 100 days or how long it's going to take him to do this. But right before the break, we were talking about other income, like rental income. You're going to need to make sure you're providing records of income and expenses for that rental property. All the expenses that are required upkeep of that rental property, including things like mortgage interest and insurance payments, even traveling to the rental house to make sure everything's okay. If you got a new rental asset, they're going to want the cost, the date placed in service, and stuff for depreciation. And so they're going to be looking for all of that information on your rental property as well. Or even if you sold the rental property, they're going to want to see the closing statements on that so they can get all the income and deductions for that. Retirement income. This is pretty simple. You're going to get a 1099-R. You're going to need to provide that. If you have traditional IRAs and you now have a basis, so you put too much money in and money that it didn't qualify, you may have basis in your traditional IRA. They're going to need to know that information because that's already pre-tax, post-tax money. If you got Social Security coming in, they're going to want the SSA 1099, or if you have railroad retirement benefits, you're going to give that RRB 1099. If you got teacher retirement or other government pensions, they're going to give you those 1099-Rs for those pensions. Savings, investments, dividends. We've already talked about the 1099 DIV, but you may get 1099 INT for interest. If you've got interest on your bank account, you're going to see that, especially if it's over $10. Under that, they're not going to care. And of course, the 1099-Bs for your sale of stock or other properties, 1099-S on the sale of your house. And yes, if you sold a house, that needs to be disclosed. Yes, you may have the exclusion out there, but we've got to fill out the forms for the home sale exclusion if you qualify. If you had health savings accounts, or long-term care reimbursements, you're going to have the 1099 SA or 1099 LTC. And then again, we talk about providing records of estimated taxes. If you got large dividends, large interest, a lot of trades with gains, you're going to have to provide that as well. And then if you have transactions involving cryptocurrency, you've got to provide that information as well. So they do tax you on transactions in cryptocurrency. If you're just holding it, haven't sold it, just bought it, there's nothing to report. If you're buying and selling or selling things you've held for a number of years, we've got to report the gains in cryptocurrency, even if you didn't pull the money out of the account. If you sold Bitcoin when it hit 100,000 and you have gains, those gains got to be reported, even if you didn't pull money out. Now, if you accept credit cards in your business, you may get a 1099-K. Payment card places are now required to file those 1099-Ks as well. And, the IRS is going to find a way to use that to tie back to your business if you're reporting it out there. Maybe you got gambling income. You're going to get a W-2G. Jury records, any hobby income and expenses. So maybe you run, have chickens and you sell eggs. That is supposed to be reported as well. I mean, it may be just a hobby to you, but that's still income coming in. If you receive prizes or rewards, those have got to be reported. Trust income, royalty income on a 1099 miscellaneous, any other 1099s you may receive as well. And here's a big one: record of alimony paid or received. And then you got to provide your ex-spouse's Social Security number. So you get the deduction, the ex-spouse has to report it as income. This also will be for like separate maintenance as well. There are certain categories that may not fall under alimony or separate maintenance, and you got to take a look at that. State tax refunds could be taxable if you've deducted it in itemized deductions and you've deducted more than what your actual tax was. So, you preparing to get your taxes done, this is all the income information that is going to be needed. Now, you may have other income coming in and you got to report that as well. If you're running that business, again, I say you've got to make sure I would tell you to have a separate bank account for your business, no matter how small that business is, so that you can actually record all the income that came into that account. Now, not necessarily everything deposited in the account is income. Some of it could be capital paid in by you or loans from you to the business. But it allows you to a little bit easier to figure out what your income was for the business if you're depositing all your income into that account and running all your expenses through that account to help determine if you've got all the write-offs. Now, what types of deductions are there available to you? Well, types of deductions can really depend a lot on your life situation and what you do. It's likely you're not going to need all this information that we're going to have to file your taxes. But if you do qualify in this, then you're going to want to have this. So if you have home ownership, you're going to have your 1098, which is your mortgage interest statements. And if you're buying a home from an individual and paying them in payments, they should be providing you with the 1098 as well for the interest you've paid them. So you should be looking for that. And if they don't give it to you, you should be asking for it as well. Your real estate and personal property tax records. So if you're paying property taxes, real estate taxes, maybe your business pays on personal property, those records of taxes you've paid in that year, you're going to need to have as well, including your real estate taxes. If you've done home energy improvements like solar panels, solar water heater, you're going to want to have the receipts and the statements on that of what does qualify. As well, if you went out and purchased an electric vehicle or hybrid, some of these vehicles will qualify for tax credits out there. A lot of the dealerships will tell you and give you the information on it. That's information that your tax preparer is going to ask you for to make sure that you have that tax credit for getting, that electric vehicle out there. A lot of times you might want to verify before you even finalize the payment and the plan on the electric vehicle does that vehicle actually qualify for the credits before you sign the dotted line, if that's the reason you're buying the vehicle. And the other thing you're going to need is any other 1098 series forms that are going to be out there. So if you got provided a form, hey, bring that form in. Even if we don't need it as a tax preparer, that's information that we might need, and we could set it aside if it's not needed. It's not a big deal. We'd rather have more information than too little of information out there. Charitable donations. How much did you give to church or other schools, other charitable organizations? Any records of non-cash donations, and the number of miles you may have driven for charitable medical purposes. Now, this isn't always needed. It's only going to be if you're going to get over the standard deduction. And standard deductions are really pretty high. So getting over that means you have a lot of mortgage interest, a lot of property taxes up to the $10,000 limit. Then we might be able to get into charitable deductions. And when we come back after this break, we're going to talk about medical expenses, health insurance, childcare expenses, educational expenses, and much more. We'll be right back after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Sometimes getting things started, and let's heat it up a little bit. How do you fix Social Security? That's really the question of the day. If you got suggestions how to fix Social Security, man, I'd love to talk about it at some point. And maybe the next week's show, we'll talk about fixing Social Security. We'll talk about fixing the tax plan. We'll look at things out there in a different light. But today, want to fix Social Security while we're on a roll and while Trump's on a roll? Hey, let's eliminate the taxes on Social Security, eliminate the offset so that anybody can take Social Security once you reach 62 and a half and not have to be offset for income that we have coming in. And let's put every government employee on Social Security, including every senator, congressman, and everybody out there. If it's good enough for you and me, it's good enough for them. And I guarantee you they fix Social Security tomorrow or within hours. Anyway, that's my soapbox. We're talking about tax deductions and, what can we deduct? Medical expenses. What did you pay for healthcare? Your insurance, doctor's visits, dentist visits, hospitals. We've got a hurdle to get over. So sometimes this doesn't make sense depending on what your deductibles and everything are, or how much income you have coming in. And then what if you've even gotten over the standard deduction yet. So don't rush to get this information together or spend a lot of time doing it. Just know what the total might be. And then if you're close or you've gone over the standard deduction, then we'll talk about possibly getting things for doctors and dentists and hospitals. However, healthcare, insurance, you might be able to get the self-employed deduction for self-employed health insurance. So we're going to want to know that. And if you got a Form 1095A because you enrolled in the marketplace, we're going to need that form to report on your taxes as well, because you may get more back in the premium tax credit if your income's less than you said it was, or you may unfortunately owe money if you've been getting too much credit out there. I still can't believe when they're running these ads, they're saying, 90% of the people are able to qualify for credits on, unemployed health insurance, because I haven't found very many that actually do, that we do taxes for. So it surely is maybe 1 in 10 actual people that go through the marketplace, and not 1 in 10 in every American. Hey, but who knows? I'm not an expert in health insurance or anything, from there. Uh, but I am an expert at tax preparation and preparing taxes and representing you as a taxpayer when you owe money to the IRS, so that you can take to the bank. What else are we looking for? Educational expenses. If you have a son, daughter, or maybe yourself, you're going through college, we're going to look for the Form 1098-T from your educational institution and receipts that itemize the qualified educational expenses and records of any scholarships or fellowships you may have received or your child received. Form 1098-E if you've been paying student loan interest. Now, there's a bunch of tax credits you possibly could get. So you could get lifetime learning credit, American Opportunities credit, those credits, but we're going to do that off of what your educational expenses are out there for your child to go out and do it. If you make too much money, maybe your child needs to get a job and work and then claim themselves, and maybe they can get the credit and save yourselves more money on taxes, because that child on your return may or may not provide you with enough benefit to actually claim them when they could actually claim themselves. So things we will look at when your child is in college is where it's going to benefit the most. And a lot of times them getting a job can get them to where they're supporting themselves, especially if they're using student loans or other grants and scholarships out there to pay their bills for college, and then get the tax credits above and beyond that. Retirement savings. You're going to get a Form 5498 showing your IRA contributions. You may also get 5498 SA showing your health savings account contributions. These are deductions that you're able to take on your tax return if you've made these contributions into these accounts. And there are special requirements on both of these. And depending on whether you're in a 401k or SEP plan or retirement plan through your employment, you may not be able to make IRA contributions. On top of that, HSA contributions, if you're in a medical plan that qualifies for health savings account, you can then put money into that health savings account, which sometimes is really nice because it's money you can put in to use for the future. It doesn't go away after a year or 10 years or 20 years. If you're not using that money, you can actually have that money invested into some kind of mutual fund that your HSA bank would offer, and they continue to grow. And then when you do go to meet deductibles or co-pays or pay for prescriptions and stuff, you can use that HSA card and pay pre-tax dollars on there. Now, those pre-tax dollars you spend through the HSA account are not deductible as a medical expense. If you are now itemizing for medical, you won't be able to claim them on both sides. Now, if you've been in a federally declared disaster, now this goes through, the IRS. You can go to irs.gov and see what is federally declared disaster areas. A good example is portions of North Carolina. Sure, right now it is portions of California and the wildfires. Here in Texas, it was places that got affected by the hurricanes, or maybe even in Florida where you've been affected by hurricanes. Those are federally declared disaster areas. Need to make sure city, county, where you lived, worked, or had property. You're going to have property records that support property losses, appraisals, cleanup costs, the records of the costs of rebuilding or repairing, and then how much were you reimbursed for these costs? What did the insurance pay you to reimburse? Now, if you got loan from FEMA. The loans from FEMA are not going to be taxable income, and don't have to be offset against your repairs or building costs. But if you got money from FEMA to rebuild or whatever to help you, that money would be offset against the costs that you've come out of pocket to build. And one of the good things to do is go to the FEMA website and see if your county, your city has been declared a federal disaster area. Now, a lot of times, if you've been declared a federal disaster area, you will get automatic extensions of time, depending on when that disaster area was declared, to file your tax return, even if you're on extensions. Those deadlines could be extended out months, 3 months, 6 months, whatever that time period would be. Speaking of FEMA, I know there's a lot of controversies out there and stuff, and a lot of us don't like federal government being involved in a lot of things that we do and see out there. I know there's been talk of possibly dismantling FEMA and giving the money to the states. I'm a strong believer in the Constitution and states' rights, and states' rights are first, meaning that, hey, local and state authorities probably know more what's going on in their local community than the federal government does or ever should know. And maybe giving the money to the local authorities to get out to help the people in their community might be the best thing to do. I don't know. We'll wait and see, what Trump comes out with, regards to this. But there's a lot of interesting things that could be done to help in each individual community where help is needed. I know here we had so much paperwork through FEMA to go through that many of our neighbors and friends that had a lot of hurricane damage just gave up and just paid it out of pocket themselves, where their insurance didn't cover and where the paperwork for FEMA was taking way too long. And, when you start running into those kind of issues and those kind of problems, it makes you take a double check on whether the federal government is the right place to be involved in dealing with these kind of events here locally and nationally. Maybe it's just coming up with the money and letting the local governments deal with it from there. So back to tax prep. If you're a client of ours, get your stuff in early. Tax season has started. So, good news, the IRS is now accepting returns. They started here today. So if you're ready to prepare your taxes and you're not one of our bookkeeping clients, because if you're a bookkeeping client of ours, hey, we're already in process of finishing 1099s for you, finishing up your bookkeeping, gathering the last bits of information to get things done. And then we'll get processing your business return or your personal return as we go. You got that organizer. Hey, get it filled out, get it in, get your engagement letter in. Let's get started. Let's get an early start this year. That should be the commitment right now. Get an early start on your taxes. If you got a refund, let's get it in your pocket, out of the federal government's pocket. If you owe money, let's still get it done. We could file and you can still pay April 15th. But at least it's done. You know how much money you need, and you can make sure that that money's in the account to get it paid. Or if you can send a check, send a check. That's purely up to you. Good news is we make tax prep as easy as possible. Jump in. Hey, let us do it. You can go to truckertaxtools.com. If you're a truck driver, let us start your bookkeeping, your tax prep here today. If you got a tax problem, call Taxation Solutions. We know how to get this done for you. We will help you every step of the way. Hey, I look forward to next week. Let's get back on that soapbox. Let's get back talking about taxes and tax planning and how we can save you money. every Monday, 10 a.m. Eastern Time, right here at taxtalk4u.com and W4CY Radio. I look forward to having you here next week. Send in your questions. Let us get them answered. Thank you. Have a God-blessed and glorious week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalk4u.com. See you next week at W4CY.com.